every year.
Hello and welcome to Business Today Television. It's a wonderful Friday morning and we are in the latter half of August's expiry, where we've seen a bit of profit booking and some kind of hit on the sentiment as far as the Wall Street is concerned on the long side. Be that what it may be, let us look at what the main headlines are and then start addressing the market. The Nifty and Bank Nifty are likely to remain under pressure on Friday as weak cues from overseas clamp down on sentiment at Dalal Street. A fresh weekly expiry may provide impetus to bulls on select blue chip counters. Five stocks, that is Punjab National Bank, Shriram Finance, Trent, TVS Motors and Zydus Life Sciences are to be included into the Nifty's next 50 index as the exchange reboots its most popular mid-cap gauge to reflect market sentiment. Good morning once again, ladies and gentlemen. Let's look at how the Nifty has performed so far and what are the probabilities that how it will fare today. So far, till August 18th and when this monthly expiry started, the Nifty's dropped about 2% overall as profit booking on the Dalal Street as well as weak overseas cues that you see coming have impacted sentiment on the Dalal Street. In yesterday's trade, about 0.8% of Nifty was again taken away, 19,365, and the Sensex closed about at 65,151. On the Bank Nifty, it was a flat trade, about 43,891 is where the index shut shop on Thursday, which was also a weekly expiry day. Let's first look at how the Nifty is likely to perform. You will see a daily chart coming in front of you. As far as the Nifty is concerned, two important things happened. On the daily charts, the Nifty has so far maintained itself above a very crucial support level, which is the 50-day moving average. What is also interesting is that yesterday's low, about 19,320, 326, was similar to the low that was set on Monday, which basically means that the Nifty is testing this level, retesting this level again and again, and that's something which should be heartening for the bulls. We've seen the Nifty lose 2.1% in August's expiry. We hit the psychological 20,000 all-time peak somewhere in the last week of July, and from then on till about 19,300 odd, the Nifty is corrected, which is fine, not much of a problem. But the issue is that we see weak sentiment coming not only from Wall Street because of high inflation data, as also from the Chinese markets in Asia, which are really in a bad phase going through. As far as the FII data is concerned, they are also booking profit, and that is something to be worried about. Index heavyweights, which is Reliance Industries, HDFC and ICICI banks, are also under pressure, and it's only the beaten down IT stocks which are providing some comfort to the Nifty. When you look at the option chain, the trading range on a daily basis is slipping lower and lower at about 19,300 to 19,250 is where we see a lot of support coming in, and the upper crust of that particular range is 19,400. That's how the whole structure is concerned. What you can do is, in case you are a confirmed Nifty trader, Look at the dips towards 19,300, 19,250, and that is when you start buying the Nifty for an intraday bounce from support 1 or support 2. The fact is that the overall sentiment is weak on Dalal Street, and all bounces are being met with sales. You can see that happening during the day. Any move towards the resistance is met by selling pressure. In case you wish to focus on the cash part of the market, there are 2 or 3 interesting sectors where you see a lot of move coming in. One of them is, of course, PSUs. Beaten down PSUs in the power space are doing well. They are doing fantastically well in the power financing space. Mid-cap IT is providing a lot of bounce for traders intraday, and these are the segments and sectors which you should focus at. Remember, the rally on PSUs is already about a month and a half long, and those valuations, while they remain cheaper relative to the broader market, they have gone up substantially when you compare it with themselves about 45 trading sessions ago. So you have to be very, very careful when it comes to the trading intraday punts are concerned. Let's now focus on the Bank Nifty. You'll see the daily chart coming in. The Bank Nifty is much weaker than the Nifty, down about 4.2% as far as August expiry is concerned. And in yesterday's trade, you saw HDFC Bank and ICICI Bank not only pulling down the main index Nifty, but also adding a weakish, bearish flavor to Bank Nifty. As far as the trade is concerned, if you look at the chart very, very closely, you'll see a doji pattern coming in, which is it's at an undecided phase. It closed exactly between the high and low of yesterday, and we saw a fairly strong test of the 100-day exponential moving average happening on the Bank Nifty. As I mentioned earlier, private sector banks seem to be in much pain on the daily charts. Therefore, not much is expected from HDFC Bank and ICICI Bank. SBI and Axis are also exhibiting weakness. So that's the problem. The only space where you see consistent demand coming in on dips is the PSU banking space, and therefore BOB, PNB, Canara Bank are the ones which you should focus at if you see them at an interval dip during the market. And more importantly, here also the option chain is slipping lower and lower. Today's trading range is seen as 43,500 to 44,000. PSU banks are the ones that are offering you a very strong probability of successful trades on the long side. This is as far as the indices are concerned. Let us now focus on data that is emanating from the F&O space. Of course, you see very, very strong traction coming in mid-cap IT and also the PSU banking space. In a while, we'll be joined by Mayuresh Joshi and Hemen Kapadia. Till then, let me just show you the kind of action that you are seeing in the PSU space. Some of the most strongest gains yesterday were in Bata India. The daily chart will come in front of you. It's a swing trade that's happening on the long side, and a very, very strong volume-led breakout that happened yesterday. If you see the cash volumes, they were the highest since August 2021, which basically means that it's a 2-year breakout on volume. The stock closed substantially higher, 5%, 1734 in the cash in the futures market, and the spot was also at the same level. What's really interesting is that this rise in Bata was accompanied by a very, very sharp dip in open interest, which basically means that bears have covered their short positions, and you will see probably some more good news coming into the counter. Volume, like I said, was substantial, and therefore delivery statistics are also fairly good. About 18x, actually more than 18 times delivery was seen on Thursday compared with Wednesday. So those are interesting data points to see. The other counter that looks very bullish is RECL. This is again a government owned public sector company which is in the business of financing rural electrification. Record high here, 5.1%, 234.20 in the futures market. You see this wonderful chart in front of you. Again, short covering, 6.5% dip in open interest. Remember, these are bears who unnecessarily try to short a market which is really, really booming and get caught on the wrong foot. So this is what is happening. Bears are getting scrapped out of some stocks, REC one of them, and at a record high, it shows very, very strong momentum. We'll have a couple of guests coming in a while, and they'll give you a comment on how to track REC as well as BATA. So this is what is, as far as I am concerned, in terms of data. Let's wait for Mayuresh Joshi, and he'll talk about individual stocks. But at the same time, let's focus on broader markets. I'd like to show you a lot of data when it comes to the Nifty draggers, and it was Reliance Industries, HDFC Bank, as also ICICI Bank that pulled the index lower yesterday. That's a bit worrisome because Reliance and HDFC Bank are actually two of the heaviest weighted counters that you've seen trade in markets, and they pulled the index lower as also ITC and L&T. So these are the 5 stocks that were pulling the index lower in yesterday's trade. The other interesting data I want to show you is the volume buzzers on the National Stock Exchange. Of course, we've discussed BATA in great detail. Apart from that, it's the defense establishment that's running away with all that is there in terms of gains, and of course trader interest. So fresh record high on Cochin Shipyard, 875, about 8.4% higher. And the interesting part is that 2.5 crore shares were traded on Cochin Shipyard, which is 6.6 times the 5-day volume average. So you can actually gauge what kind of trader interest is coming into these stocks. Similar was the situation in Garden Reed Shipbuilders, which we'll discuss later. But apart from that, paper stocks, India's largest paper company, JK Paper, 375, 371.65, up again 5%, record high here. And this breakout has happened on 54 lakh shares, which is 5 times the 5-day trailing average. Apart from that, Latent View is attracting a lot of buyers. Of course, JM Financial at 78.25. This is a low beta counter. This is a high beta, low price counter, 78.25, 8% higher, and 7.8%, 7.8 times 5-day average. So these are the record highs that you're seeing. And what's really interesting is look at companies which have really leapt up in yesterday's trade. One I would like to highlight is Escorts, fresh record high here, 27.90. This is a volume-led breakout. The counter closed 3% higher, and day before yesterday we had highlighted it in our morning commentary. So these are the stocks that are doing fantastically well. And apart from that, I'd like you to watch the crude oil daily chart. There's a bit of an uptick here, although we've corrected substantially from the most recent high, which is $84 a barrel. But for the last 2 days, the trade is a bit on the long side, and this impacts sentiment negatively. Once Mayuresh joins, we'll also discuss how the rupee is at an all-time low versus the dollar. The dollar index is also shooting up, and the fact that treasury yields in the US on the 10-year bond have hit a 15-year high, mainly on account of the kind of commentary that's coming in from the US Federal Reserve. They feel that inflation will still remain a problem for the world's largest economy, and that is like one of their officials once said, is the problem of the world as well. So if you have higher inflation coming in from the US markets, that creates a problem locally as well. So crude is against us, the dollar index is against us. There are view cues coming in from Wall Street in Asia. We are already down about 2% on the Nifty. This is what we are grappling at as far as the daily trade setup is concerned. So it's neutral to weak as far as the main indices are concerned. Any dip towards support levels you should look at maybe buying an intraday bounce. But overall, the theme on daily charts, 75-minute charts, is a sign of weakness, both for the Nifty as well as Bank Nifty. So that's the trade setup that's coming in. Like I said, Nifty is consolidating near 50-day DMA, and the Bank Nifty at 100-day DMA. Both of these have spent considerable time over the last 1 week near these averages, and let's hope for the broader sentiment to sort of stabilize at these levels. But given the cues that are coming from overseas, given the consistent profit booking that we are seeing from foreign institutional investors, this is a pain point, and let's see how Nifty bulls negotiate this. We are already in the second half of the monthly expiry of August, and this is the time when options premia contract very sharply because theta decays faster as far as the options pricing are concerned. So this is how it is. There's some more data that I'd like you to see when it comes to stocks in the F&O space. Let's look at Titan. The PCR will fire a daily chart for Titan in front of you. This is also one of the stocks which is extremely bullish on the technical parameters. 3071. The most recent record high was 3215, hit somewhere in the first week of July. And after a serious, 20-25 day sideways trend, sideways to weak trend, there is a nice uptick on Titan. You see yesterday's volume in the cash market, it was somewhere like 16 lakh shares, and we've seen this accompanied by a drop in open interest, which basically means that there is again short covering happening on Titan. Bulls are on the front foot and bears are scrambling to cut their shorts. So Titan is also something that you should look at. The delivery statistics were about 1.9x when it comes to comparing Thursday over Wednesday. Apart from these, market favorite is Birla Soft. You need to look at that chart as well. It's at about 470 rupees on the F&O space, and this is a multi-month high. Let me just tell you what it is. It's the highest level since April of 2022. So that's easily a year and 5. So about 17-month high coming in on Birla Soft. Remember, the all-time high for the stock is 584, and very, very strong move coming in on Birla Soft yesterday, 4% higher, again accompanied by a dip in open interest. We'll welcome Mayuresh Joshi. He's the head of research at a very well-known foreign institutional investor, Market Smith India. Mayuresh, we were chatting very early in the morning today, 5:30 a.m. You were worried about China. I'm also worried about the Indian rupee as well as the increase in bond yields. How do you see sentiment on Dalal Street? Good morning.
Morning, Shail sir. I think two things. Clearly, how China is shaping up, the real estate slump that we see quite significantly. And a lot of reports are suggesting that the pain is much deeper than what the statistics are probably getting displayed. So have a look at bond yield spikes, the 30-year US bond, the 10-year US bond, the German bonds, both short-term and long-term. So I think the global bond market is fearing a credit risk kind of a scenario in terms of what can probably go wrong after all these events are transpiring both in China and core inflation remaining extremely sticky in Europe. But on the other hand, Chelsea, you probably got better numbers coming in from Japan in terms of GDP growth. The inflationary numbers in the United Kingdom coming off. And in fact, I was just reading a very interesting tweet by an analyst in the US. Any past US recessions after the first Fed hike has happened typically happens between 18 and 22 odd months. And we are already into the 18th month. So everybody's questioning where is the recession in the US. So I think there are mixed data points. India probably stands out. So I think the choice of your tie, Shail sir, from the Indian markets is probably not correct.
Yes, on purpose, I wore a shirt with a red collar along with a red tie just to entice the bulls. Mayuresh, the entire macro space around India is also deteriorating, including some macro numbers that we also track internally. inflation, as the RBI flagged out, is persistent. IIP is slowing for the month of June. And the other problem that I see is now the weakness in the rupee. So, given all these, pain points, do you think the Nifty is corrected substantially, or you would say, 19,300 is here, let's touch the 200 DMA, let's sort of, go closer to 19,000. So, both parties will be happy. एक बार 20,000 देख लिया, एक बार 19,000 देख लिया, तो दोनों तरफ पैसे बन गए. Where do you stand?
No, so I think the main index, whether it's the Nifty or the Sensex, is obviously feeling the heat, and you're absolutely right. I think we did witness 20K, and the optimism was ever growing at 20K. But because of global conditions at this point of time, as you rightly pointed out, I think the global macros are on a much stickier wicket at this juncture as we speak. And a part of that will get reflected in our trade balances, as an example. It will get reflected in some pain in the supply chains because as a raw material, we are definitely dependent on a lot of things, whether it's pharma APIs, EV inputs related to lithium-ion batteries, so on and so forth, as far as China is concerned. So to a large extent, macros are a little bit concerning on the global scale. On our own front, inflationary factors have definitely moved higher. But you've probably seen, as an example, tomato prices actually correct in the last few days. So the hope is that if rains again normalize in the next few weeks, food inflation will be under control, and specifically cereal and pulses inflation, which is probably showing signs of stickiness as we speak. With all these factors in play, crude, which was spiking up, and deflationary conditions stroke a slump in demand in China, is expected to probably ensure that crude also probably cools off, which is a better condition in terms of the trade deficit for India. And though RBI has flagged off the inflationary risk for this year, let us also remember, Shail sir, that RBI has also kept a tolerance band of 4% plus to minus 2%. So we'll not be hitting that 6% anytime soon, which brings us to the scenario that maybe the rate scenario might persist. Rate cuts, as was expected to happen in the first quarter of the next financial year, might get delayed by a tad bit, but that might not hamper growth because festivities in the second half will ensure growth comes back very, very strongly. So Nifty, as we see at MarketSpin India, distribution days are piling up. A distribution day is a 0.2% correction in Nifty with higher volumes than the previous day. Some indices have obviously corrected beyond the moving averages, like the bank index and some leading stocks. And therefore, I think focus on the strong domestic cyclical story, which will still persist in the Indian context. So I think this juncture, if the correction comes, I think it's a welcome move, looking at how global macros are stacking up. Domestic cyclicals, in our opinion, where the EPS RS rating is still holding out to be strong, might still turn out to be a good growth and momentum play in the sector.
Okay. Mayuresh, let's do two things. First, let's look at your stock pick for today, as well as for the medium to long term. What do you think looks good fundamentally, and what do you think has corrected on the charts for you to probably make a nice punt on the long side with the checks and balances, maybe a SIP on a regular basis into a particular stock? Where do you find value in this kind of a market?
So as I mentioned, sir, I think domestic cyclicals are looking very strong, and with the earnings might sustain. Within this, I think at key pivot levels of 2024, 2050, Astral Limited from the CPVC pipe segment probably looks very, very interesting. Two, three things. One, I think the entire perspective in terms of government ordering when it comes to Har Ghar Pe, Nal Har Ghar Pe, and the other schemes related to that will ensure that substantial order flows keep on coming through for pipe companies. Astral is one of the leading CPC manufacturers in the country as we speak. They're also into adhesives, and they've recently forayed into faucetware and bath fittings as well. But their main business probably still remains the CPVC business. And here, I think the kind of expectations that the street probably has, they've delivered a very good number as far as Q1 is concerned. specifically in terms of the pipe margins. So the pipe margins in particular were at 18%. The revenues had a little bit of a deacceleration in terms of expectations, primarily because of polymer prices going down. But input prices have also gone down significantly. And their own expectations in terms of volume growth. The industry might grow at 9 to 10%. They are expecting Astral to probably grow this year at 16, 17%, and next year in excess of 25 odd percent. The optimism, Shelter, also comes in from the fact that initially in the last con call, that is Q4, they had planned a couple of plants to probably come up. But even in this tough macro conditions, their expectation now stands to put in 3 units, which will come in Guwahati, Hyderabad, where the first and second phases should probably start coming through by FY25. And therefore, the excessive volume growth that you probably see in FY25 will come through. When you're probably talking about the new elements, the faucetware and the plumbing, the faucetware and the bath fitting segment itself, which is sanitary ware, you're probably expected to see numbers in Q3, Q4 turn a bit positive, which is a huge, huge positive because then the consolidated numbers, which stand in terms of margins at 16% and grow at 18, 19 odd percent. They've got sufficient cash on books at 465 odd crores, a huge dealer and distribution network, which is extremely essential for the business, and more than 500 showrooms in terms of physical presence as well. So our sense is that even if valuation is a little bit on the higher side compared to long period averages, I think this conditional buy or keeping this stock on your buy watch list, if it crosses that pivot level, will make absolute sense for medium to long term investors.
Right. We've already discussed Astral as far as the fundamentals are concerned. Mayuresh, let me play the devil's advocate. Now, there are 2 or 3 things I noticed. One, the stock is at a record high, and it's been a very, very rewarding stock when you look at. I'm seeing the chart since September of 2023. There are 1, 2, 3, 4, 5 stock splits. The stock has at the same time moved from 52 rupees to what it is at 1991. You've mentioned all that is positive in the stock, but something that our people and our investors and potential buyers need to keep in mind is that it's at a very high price earnings. Trailing TTM on PE is about 109. That's very, very steep, and it's probably the most expensive stock in the pipe space. The price to book is about 19 times. So those are the things that you need to keep in mind. But as they say, Mayuresh, in India, अच्छी चीज़ कभी भी सस्ती नहीं मिलती बाज़ार में, और probably Astral fits into this completely. Low debt company, just 77 crores. What can you do? You will have to sort of pay attention to what the bhav is. There's another wonderful saying that Mayuresh will confirm, bhav bhagwan che in bazaar. So what can we do? Quality in the markets is pretty expensive, and Mayuresh is really keen to sort of ride this record high on Astral. Let's see how it moves. If you see the daily chart, what's really interesting here, Mayuresh, is that it's in a sideways band for a while, and it's about to sort of maybe explode on the higher side. You wanted to add something, Mayuresh?
No, you're absolutely right. So I think 2 aspects. जैसे आपने rightfully कहा, I think everybody waits for better prices and bad markets. And good markets and good prices, I think everybody is probably attracted to that. In this case, I think it has survived both bad and good markets and still survived. So our sense and optimism runs from the fact that the management itself is very buoyant in terms of their commentary. And irrespective of how we are placed at this juncture, they're actually announcing 3 plants instead of 2, where they're saying that they've got so much of orders in hand. The demand is so robust. And as prices come back very, very strongly, they are very, very confident of maintaining their margins. So I think it's an entire volume stroke operating leverage play, which then gets played out on the bottom line very beautifully. And as you pointed out, I think the net cash obviously assists because there is very little payouts in a high interest rate scenario, even if it persists for a long, long time. So I think it's is the question that they have having premium multiples, but whether these multiples can compound even further based on earnings growth can be a strong possibility for business.
Right. So this is Astral Limited for you. Uh, Pay attention to the price and try and add this via SIPs. This is what Mayuresh's view is. Also consult another financial advisor if you want to step into Astral. But we welcome Mr. Heman Kapadia. He's the Senior Vice President of Equity at KR Choksey Stocks and Securities. Welcome, Heman, to the show. How do you think the sentiment is on Dalal Street? We seem to be in a bit of pain as far as the Nifty and Bank Nifty are concerned. But how do you see this pain?
Very good morning, Shailendra. Thank you for being on the show. See, frankly speaking, we've had a 3,200 point run up as far as the Nifty is concerned. It was virtually one way, notwithstanding some minor corrections. We needed an excuse to correct, and now we walked into correction. The way I see it, I think the month of August is a washout. I don't think anything happens. I hope the month of September is better. The VIX has gradually creeped up to 12.24. US VIX has creeped up from say 10.5 to 16. Bank Nifty is not supporting the Nifty. You have Reliance cooling off. IT seems to be the saving grace. Above $88, crude is going to give a breakout. Rupee dollar equation is skewed in the favor of the dollar. Dollar index is bouncing back. So everything seems to suggest that it's going to be script specific. I don't think anything happens per se. Like you're saying, the sentiment of Dalal Street is cautious. 19,300 hasn't broken. We closed below 19,300. There are three daily gaps, Shailendra, three gaps on the daily chart in the Nifty, starting from 18,700 to 19,100. So some of these might get covered, or there could be at least an attempt to cover up. Corresponding level for the Bank Nifty is 43,600. If 43,600 cracks, we go to 43,400. And if 43,400 cracks, I think that's trouble. So I'd say sentiment is slightly off.
Right. So this is how Heman sees the market. Let's now shift our attention for a while on pre-open trades. The Nifty's slipped further. 19,300 is where the bulls will battle bears today. So a 50-point downtick so far in pre-open. Let's look at the stocks that are causing this pain. Reliance down about 1.7%. Remember, these are early rates. They'll settle down substantially. But so far, it's Reliance that it's pulling lower. Let me see what is HDFC Bank doing. Down 0.2% in front of me, 1591. ICICI Bank is flat at 951. Axis is a bit higher, 937.90. And SBI is flat at 572.15. I'm very keen to see what tech is doing, simply because the rupee is weakening further. 1412 on Infosys, flat, and 0.5% lower on TCS, 34.16. Let's shift focus and attention to F&O. Nifty still down 30 points. That's a bit of a issue, but that's how cues are coming in. Let's look at the gaining list. I see ITC here 1% higher, 444.85. Remember, FMCG and IT, these are defensive plays in the market. Given the fact that the market is corrected substantially, this is where value buying seems to be coming in. Apart from this, let's see Voltas 1.3% higher, 837. Now it's flat at 825. There's not much happening here. Let's look at stocks that are slipping. Manappuram Finance, profit booking here 1.3% lower, 152. Remember, it was one of the top gainers yesterday. Petronet LNG 1% lower, 221.70. I see Infosys now slipping 0.8% lower, 1400. Let's look at the broader markets. Nifty now down 45. In the NSE 500, IT, very high beta counter from the IT space, Mastech, 3% higher, 2150, but next to no volumes. Let's look at Zydus Life, 2.3% higher, 16,660. There's nothing at all happening on stocks which are making some kind of a move. It's just a flat 2-week trade. Remember, it's also Friday, so traders would be hesitant to extend either long or short positions ahead of the weekend. So those are the things that I'm looking at. Let's shift focus to our guests, Mayuresh and Hemen with us. Mayuresh, to you first. Rupee at a record low and IT at valuations that are really juicy. What would you buy?
So I think, as you rightly pointed out, I think it becomes a truly defensive space, both in terms of the weakening rupee and where the expectations in terms of at least order flows maintained so far, margins maintained, and cash flows being maintained remain extremely buoyant. Having said that, I think a large part where the valuation comfort probably remains within the space would be large cap IT, because mid cap IT is in a different zone of its own. And within the large names, I think stocks which are making good bases at MarketSmith India are stocks like an HCL Tech, where again, I think the two large order wins that they've got is providing a lot of comfort to the street in terms of them expected to meet higher end of their revenue guidance. And EBIT margins are expected to stabilize as we step into Q2, Q3 and the second half, because a large part of the salary lags behind. So both from a valuation perspective and where a nice base is being formed, is probably HCL Tech from the large caps.
Let's see HCL Tech's chart. This is the right time to have a look at it. Remember, the most recent high on this stock was somewhere like 1200 rupees. It's at 1176, one of those rare outperformers in the IT space. Let's get Hemen into this discussion. Mr. Kapadia, you shared your fantastic view on the markets a while ago. Are there any individual stocks that are catching your fancy on the long or the short side, sir?
Yes, Mr. Bhatnagar. I think firstly, a few stocks which are slightly probably from an intraday point of view, they are contra buy calls. Firstly, that the buy call on ACC. But once again, a small caveat: if the market opens gap down, and if this opens below the recommended price, stay away. I don't think it's a very healthy trading market. But yeah, so it's been down for some 10 trading sessions in a row, taken support on the 55-day exponential moving average, has taken support twice over the last 2 trading sessions on 1880. So a bounce is underway. The intraday charts seem to suggest a crossover buy by the mechanical indicators and a hint of positive divergence. So one can buy ACC at 1900, stop loss 1885, target 1930. And the second one is also a contra buy call, a buy call on Bajaj Finserv. Bajaj Finserv is quoting at around 1476. So one can buy Bajaj Finserv at 1475, stop loss 1465, target 1495. We've come up from 1660, the recent down is on from 1530. Oversold, crossover buy, same logic, contra buy.
Right. These are the two trades that Mr. Kapadia has suggested. Hemen, anything in the large cap space, blue chip space, which has corrected substantially, offers interest to you on the long side, or do we still wait for the correction to pan out?
I think there are a few stocks. One is Ramco Cements. That is something which looks interesting. It's on the 4th wave on the weekly chart, but it's still going to take some time to play out. Another stock which looks good is probably Ipca Lab. It's come off a bit. And from a slightly positional point of view, I think Voltas looks very interesting. It's virtually fallen off a cliff from 1360 to 740. I believe it is in the process of making a double bottom there. So the weekly and the monthly charts seem to suggest a turnaround is in the offing. The weekly seems to inspire more confidence. So some of these can be kept on the radar. They are tradable. But if you want to play it safe, I think one would probably need to trade a bit, because the market per se, Mr. Bhatnagar, if it doesn't settle out in September, I have a feeling, looking at the crystal ball, it might just spill over till October.
Right. I'd like to see the Voltas chart again. And Hemen bhai, please blame North India for this carnage that you see on the stock. This time there were heavy rains. The summer wasn't as harsh and as brutal as it is as it has been over the last 5 years, and therefore no air conditioners or fridges were sold as they were sold a couple of years ago. So that's the reason why you see Voltas available at 825. And of course, both the daily and the daily and the weekly charts say that it's the 200-day EMA and the 200-week EMA where the stock is battling. Let's touch base with Mayuresh. Meanwhile, the Nifty is down 63. It's settled at 19,301. Remember, this is where the bulls and bears will battle on Friday. Mayuresh has sent me a beautiful chart, actually an Excel sheet, which details that the software sector takes nearly 24 months for the recession to appear after the Fed rate hike. Mayuresh, over to you. This data is from November 1968. Neither were you here nor me, but I'm sure Hemen Bhai was here. But take it away.
So to that point again, I think this is a tweet by an analyst in the US. He's put out this table in all past recessions. And what this chart is probably saying at this juncture is all past recessions after the first Fed hike has happened, 18 months is when the recessionary factors start playing out. In this particular cycle, we are in the 18th month, and we are seeing no signs or trends of any of these factors actually playing out. So I think this chart that the US analyst has probably put has taken into account all previous recessions. And therefore, I think this recession, where now the Fed has also put it off, and so are a lot of rating agencies and analyst firms in the US, that recession probably will not hit the US market, is something which is probably expected, if it does, to be proven right, as past numbers would suggest.
Okay. Let's get Hemen Bhai into this discussion. Mr. Kapadia, you've seen the markets longer than me and Mayuresh. And we've also seen that, the fear-mongering that happens on the IT space when it comes to the recession. I remember 2001 very clearly. Mr. Murthy, the owner of Infosys, kept on saying that business will increase, but the stock kept on falling. What would be your top pick in the IT space, given the fact that there is continued weakness in the US and the rupee is at a record low?
I believe we take a lot of cues, Mr. Bhatnagar, from the Nasdaq also. So that has also walked into an intermediate correction. But we have held firm, like you said, because of the rupee-dollar equation, the rupee weakness. So we have remained range bound, and despite worries, we haven't gone. If you look at the Nifty IT index, 31228 has been crucial resistance on the monthly chart, and we are struggling, or the good part is we are struggling over there and still holding on. So one gets the feeling that this has a propensity to surprise on the upside. And I have seen recently that the mid caps, the mid cap ITs have done much better than the mainline IT stocks. Infosys has been the weakest among the entire IT pack. Now it is playing catch up. Relative strength comes in the form of TCS, simply because it hasn't done much, but it hasn't gone down much. Wipro would be my second pick, but Wipro traditionally has been very slow, mainly through lack of liquidity, not too much of insti participation. But it's safe, downside limited. We have a rounding bottom. So my picks in the mainline stocks would be TCS and Wipro. Among the mid caps, I mean, there's a whole bunch of stocks. OFS is looking good, Emphasis is looking good, but they've all run up. So HCL Tech would be the next safe one. Why I'm saying safe? Risk reward ratios in favor, stop loss is closer, hasn't done much. That's
it. Right. So you have a double tick on HCL Tech. Mayuresh likes it fundamentally, and Hemen Bhai gives his thumbs up as far as the technical charts are concerned. Let's just spend a bit more time on HCL Tech in front of us. Remember, this is one of those stocks that hasn't seen much pain compared with TCS and Infosys. An all-time high of somewhere like 1350, and we are already trading somewhere like 1176 on this one, opening flat 1173 in front of you. We have still 2 minutes to go. Hemen Bhai, this is for you, because you watch charts as well as you look at fundamentals as well. Give me one PSU stock which you think will still outperform.
I okay. Firstly a caveat. I have a holding in the stock, so that's my first disclosure. I think something like a Bank of India looks very interesting. I think most of the PSU banks have been all over the place. Whether you look at Karnataka Bank, Can Bank, and Bank of Baroda moved earlier, then you have the JK banks. But I think Bank of India is something which hasn't done much. If you look at the charts, we still haven't overcome 100. It's been moving sideways for 6 months. The numbers were great in this quarter. So I have a feeling this seems like a dark horse. So Bank of India, I think, can surprise significantly at the risk of sounding overly optimistic, maybe because I have a bias due to a personal position. I think a 40% appreciation from here in the next 12 months seems like a cinch. Mr. Bhatnagar.
Right. So an all-time high of 585 and available at 89 apiece, along with the requisite disclosures, Bank of India. The markets are open, ladies and gentlemen. Let me just spend a couple of minutes talking about stock prices, and then I'll get back to you. So the Nifty is opened 83 points lower, 19,283, which basically means that the 300 level is gone. The Bank Nifty is down 210 points, 43,692. IT is opened 0.5% lower, 30,873 on the index, down 185. Now let me look at the prices, how they are ticking. First, let's look at the index heavyweights. I am only concerned for the moment with Reliance, down 0.5%, 25.26. HDFC Bank down 0.5%, 1588. State Bank of India down 0.5%, 568. ICICI 0.5% lower, 947.20. Axis Bank 0.5% lower, 932. All 10 index heavyweights are in the green, apart from L&T, which is just flat at 26.57. This is how the main heavyweights are doing. There is not even one single stock in the 12 that I tag which is in the red, in the green. Infosys 0.5% lower, 1404. TCS 1.2% lower, 33.95. Let's immediately shift focus to FNO. Let's see where is pain and where is gain. Let's look at most actives with a bit of pain. Okay, Manappuram Finance, heavy volume down 3.5%, 149. Remember, this is a high beta counter. It had risen sharply yesterday. Reliance and HDFC Bank we've discussed. I see some pain in RECL as well. Remember, this could be an opportunity. We'll discuss it with Heman Bhai and Mayuresh. 0.6% lower, 233.70. ITC down in the red. Trent, remember these are 4 or 5 stocks that are coming in next Nifty. In the green, 0.2% higher, 1980. Adani Ports in the green, 0.5% higher, 813.20. PNB, 0.5% higher, 63.55. Let's shift focus to NSE 500. There's no stopping Cochin Shipyard. Again, 5% higher, fresh record high, 918.50. Dr. Reddy's, 0.5% higher, fresh record high, 59.24. Trent, flat but still a fresh record high, 1977. Let's look at 52-week highs. Anything that catches your fancy? Nothing much here. So while the broader markets are in a downtick, the Nifty on Friday is down 69 points. Remember, 19,300 is now with the bears. Nifty Bank is down about 126 points. Nothing much happening there. Let's pay attention to some other indices. Let me see how the advanced decline ratio is, and then we'll shift focus to our 2 technical guests. Okay, the pharma index is up 0.3%, 15,401. Well, that's about it. The Nifty IT index is the top loser, 0.9% down, 37.85. Remember, we were hoping that IT will help the index because the rupees hit a all-time low. Heman Bhai, I'm coming first to you. What catches your fancy in this kind of a market? 71 points lower Nifty and 120 points lower Bank Nifty. What are you watching?
To be honest, Mr. Bhatnagar, I would prefer to have a Subway sandwich and go to sleep because, frankly speaking, the markets are really untradeable. But that's on a lighter note. Frankly speaking, you have something like Hindustan Aeronautics Limited that is consolidating sideways. It hasn't yet broken out, but the setup seems to be a correction in a bull market. So that is something one can keep an eye on. And many of the Adani Group stocks, I think, are looking technically interesting. Starting with Adani Ports, one gets the feeling that we've consolidated a bit. Now we are setting the stage for an upside. We haven't closed above 800 on the weekly chart since December of last year. So I think there are a few pockets which, once again, very few and far between. But yes, there are a few stocks which seem to promise to outperform. Maybe a Sun TV, also a deeply oversold UPL. So I have a feeling that yeah, it's not all gloom and doom, but generally the market has lost its chutzpah. It's going to take some time.
Right. Heman bhai, both Mayuresh and I would happily join you in having a Subway sandwich on this Friday morning. But like I said, you have that wonderful luxury and freedom to do that. But sadly for me, I have to be here at least till about 10:30. But post 10:30, I'll pick one up in Delhi. You pick one up in Bombay. But let me show you some very good data that's coming in from the high beta space. Heman bhai, this is for you as well as Mayuresh. A very strong breakout on Escorts record high. We've crossed 2800, I think. Yes, 2826 is the price. Heman bhai, first to you. Escorts, what's happening?
Whatever is happening is having a very sanguine effect on the stock. I believe we are heading towards 3250. A consolidation breakout, all-time high. I'm not sure what is happening, but whatever is happening still looks good, has upside left.
Right. So 3250 is what Escorts is likely to hit on charts. Mayuresh, what has changed for this company?
Two interesting things, sir, that are happening. One, I think the Mahindra launch, which happened in Cape Town, where they showcased their set of tractors. The large expectations from an industry perspective is that higher single-digit tractor growth can still come in for the tractor industry in this financial year, and even a better growth in the next financial year. So I think the optimism emits from the fact that volume growth should be reasonably stacked up. The second element in terms of the Kubota tie-up, and Kubota is a very well-known name in less than 50 HP tractors and excavators. They are world leaders in excavators as well, which can be a huge growth segment for Escorts. And with the Kubota partnership across the globe, they also have a fair sense in terms of the distribution network that they can tap. The third element obviously is the construction equipment segment and the railway segment, which is picking up steam quite significantly. As more infra spends will happen in the second half, as we near close to the general elections, and more activity probably starts coming through, both these segments will have a huge impact, both in terms of volumes as well as price, which will give some element of stability both on the top line and as far as the margins are concerned. Last but not the least, Escorts is a well-known name in less than 30 HP tractors. And with the land bifurcation, I think 80% of agriculture lands are less than 1 hectare, which makes it extremely comforting for less than 30 HP tractors, which Escorts probably have. So I think a lot of factors, both sentimentally, expectations of fundamental turnaround for the industry as a whole, probably working in favor for Escorts.
Okay, so that's the fundamental view coming in, as also the fact that Heman bhai thinks that it's likely to see about 3250 on the charts. Let me again hit some price points for you. The PCR will fire a chart of RECL. Remember, this is one stock that I had highlighted when it came to pre-open trades. Heman bhai, for you first, record high 237.50. Public sector parentage in the PAR space, valuation still okay. Would you chase this?
Well, that's Shailendra bhai, that's googly, a dusra one that you pulled. But it has requisite momentum. It's given a 13-year breakout post 155. But chasing it, well, frankly speaking, it ticks all the boxes as far as technical parameters are concerned on daily, weekly, monthly charts, whether it's moving averages, oscillators, and everything. But no, I wouldn't like to chase it. Despite obvious momentum, despite significant further upside, I would wait for some sort of a correction to play it out. So, I know, once again, there is no question of shorting, but I am slightly conservative with the market. Okay, this is outperforming, no doubt about that. But the market's looking slightly wobbly, corrective-ish. I prefer to wait for some sanity to prevail. And if I miss it, there's lots of other things to look at.
Okay, Mayuresh, the charts are extremely overheated for RECL at a record high, and Heman Bhai is absolutely right in saying that you shouldn't be stepping in immediately. My question to you is, what is looking good as far as REC is concerned? Even now, will you believe it, it's at a price to book of 1.
So valuations are still reasonable. You're absolutely right, Shail sir. I think, and I would absolutely concur with Heman bhai. I think the excessive moves in the stock and how they are placed at Market Smith above key pivot levels, quite substantially higher than that, will warrant a pullback onto the stock as far as fresh investments are concerned. Any growth investor who's probably holding onto the stock can hold on. I think 2 3 factors here as well. One, the management is extremely optimistic, Shail sir, that by FY25 their net NPAs will turn zero. They're expecting 10 resolutions of $1 billion each in FY24 and 9 resolutions happening to make that figure turn zero by FY25. And at the same time, they're of the belief that yields will probably inch higher from 3.3 to 3.5% and they expect to disburse 1.5 lakh crores in this financial year itself. Add to that, I think if you look at the dividend yield at 6.5%, it becomes a kicker in terms of how valuations are stacked up, how earnings are expected to play out, and the comfort that they're giving a 6.5% dividend yield. So I think there are a lot of check boxes that REC is probably ticking at this juncture, but a pullback for fresh investors.
Right. Let me just stick a bit here on REC. While Heman bhai, you mentioned the requisite checks and balance, what would be a good entry point should REC give us an opportunity to come in at lower levels? What do you think at 236 now? What would be a good entry point for this particular stock?
Well, Mr. Bhatnagar, wishful thinking would say that the level would be at 168. That's the swing high posted in the quarter into June 17. But I do not think it comes off so badly. So looking at recent price action, I would say it would be better to sort of split it up like an SIP, because I am not sure if one can zoom in and catch the exact bottom. But yeah, the first level I would look for shopping is probably 217. The next one is a small swing high on 1st August, 204, and the last one 175. 175 seems a bit far-fetched, but 217 and 204 are possible retracement levels if and when the correction sets in, Mr. Bhatnagar.
Right. So let's hope we get 204, 210, 208 on RECL whenever it corrects. I know 168 is not coming him in by. Be that as it may. We'll thank Mayuresh from here on. Thank you so much, Mayuresh, for spending such quality time with us, and also for the 5:30 a.m. Tweet today pointing out what China is doing. Actually, it was a WhatsApp for the moment, and we exchanged a couple of messages there which we can't share in public domain. But the fact remains, that's the reason why I wore a red tie. Thank you, Mayuresh. Have a nice weekend. And we'll again shift focus back to the markets with Heman bhai. A lot of stocks ticking. Escorts taking it away 28.40. Hemant already marked that. Mr. Kapadia, a lot of stocks, the ones that are coming in the next 50 index on the Nifty are also ticking pretty well. I'd like to take your view on Punjab National Bank, 63.95 in front of me. Also a part of the next Nifty now, whenever the next changes happen. What are the long-term charts of PNB telling you, sir?
Long-term charts are suggesting targets of 70, 85 and 100. I think the entire PSU bank sector is on a tear. If you look at the Nifty PSU bank index, 4640 is the all-time high. This level has come after 11, 12 years. We are struggling over there. Once we overcome clear blue skies, it will be a major breakout after 11, 12 years. And PNB, okay, it's having a laggard, no doubt. It is playing catch up, and I think it has got a long way to play catch up because the monthly charts are looking quite solid. So, like I said, 70, 85, and 100. 70 and 85 seem like distinct possibilities. 100 from this at this point of view seems a bit stretched, but I stick my neck out and say 70 is coming and 85 is on the anvil, Mr. Bhatnagar.
Okay, now remember Hemant Bhai has already highlighted one more pick for you from the PSU banking space, that was Bank of India. Now it's of course opened at 90.55. Again, as he rightly said, there's nothing much that's happened in the stock if you compare it with the likes of BOB and Canara Bank. So these are the two stocks on the long-term charts that Mr. Kapadia feels fairly confident about. Adani Power, you also mentioned, sir, at the beginning of trade that the entire Adani group looks good. You had highlighted Adani Ports, but a transaction that happened 2 days ago on the equity side has added a fresh burst of energy in Adani Power. Would you care to comment?
10% upside, Mr. Bhatnagar, in the next 4 weeks. Buy now, right now.
Well, nothing could be more precise and better than this. In less than 3 seconds, Hemant Bhai has said, where is this headed? 10% higher. So with the requisite checks and balances, ladies and gentlemen, it's Adani Power for you. Days high already. And this is the price that you saw last in January of 2023. So already at a 8-month high. That's how Adani Power is facing up. Another stock, Hemanji, is Trent, and also the one that is in the group of 5, which will be a part of the next Nifty index. So already at a record high 2002 and very, very steeply placed on the charts. Would you want to hazard a guess here?
This is once again a difficult question to answer, but it's in an uptrend on all time frames. If I were to go long in trend, I'd keep today's intraday low as a stop loss on 1960. Looks good, but once again, I'm not sure if I chase it. If I chase it, yes, I would keep today's low as a stop loss. But yes, I think we are distinctly heading higher. The bull grip is strong on technical parameters. The stock seems quite solid. Yeah, so if it's a stop loss on 1960, I would trade. Not a very big quantity. There is absolutely no question of shorting it. We're looking at a further upside without a doubt.
Yeah. So for those neophytes who've come into the market, remember a very, very strong bull curve is not to be shorted. Stay away if you like. Do not participate on the long side, but at least do not short these trends. They are the ones that really push the stock much higher, as you see happening in Bata and some IT stocks. So Trent, stay away. But the earnings for the first quarter were fantastic, and adding fuel to fire is the fact that this stock, this wonderful company belonging to the Tata Group, will now also be a part of the Nifty Next Index. Mr. Kapadia, we've discussed in great detail your liking for PSU banks, as also you prefer REC probably at a bit of a pullback. What would be your thought process on railway stocks, again the PSU basket, which are doing fantastically well? Would you uh, would you would you have some favorites there?
I had IRFC and RVNL as favorites, and maybe Nircon. But whenever the stock goes up by 20-30% and OFS comes in, breaks the momentum. So I guess IRFC is on the way to do that. So frankly speaking, Railtel is something which looks very interesting, Mr. Bhatnagar. But once again, these OFSs come in without a warning. So notwithstanding that impending, okay, this is just anticipating.
Absolutely.
Is whatever happened in the past. I'm not saying this will happen, but I mean, I'm just so Railtel is something which I would look at, and post the, I think there is no confirmation on the price or when. Post the OFS for IRFC, I would assume that would come at a slight discount, and that would give a buy opportunity. So, frankly speaking, IRCON, IRFC, all of them look good. My personal preference would be a Railtel or an IRFC on decline. Railtel has already entered a small correction, so slightly deeper correction would make it an interesting positional or longer term buy.
Remember, all these three stocks, whether it's IRCON, IRFC, or Railtel, are trading and consolidating near record highs since they are owned by the government of India. The government of India also takes these opportunities to sell large chunks via QIPs, which add, a bit of a dampener to the sentiment, as also a dip in the price. So, with those checks and balances, these are the three favorites that Heyman Bhai has. As far as the railway space is concerned, let me pay a bit of attention to the markets. The Nifty is in the green, and that's a wonderful. The Bank Nifty is in the green, and that's a wonderful development. 43,900 in front of you. A mild green tick of 1506. Let me see what's driving this change. I would imagine it's nothing much actually, except for PNB, which is in the green. Let's look at HDFC Bank. What's the low for the day? 1594. It's still there. 1597. Let's look at ICICI Bank. Again flat. The low was 946. It's at 953. Axis Bank, the low was 931. It is 938. So these are the two stocks that are pulling it up. ICICI Bank and Axis Bank in front of you. Meanwhile, Escorts is taking it away, and so is Adani Power. Remember, these were the two stocks that Hemanji mentioned, as also RECL. So as far as high beta is concerned, there is absolutely no pain in the market. The only pain that is visible is on the two main indices, which is the Nifty and the Bank Nifty. They consolidate and continue to trend in a sideways weak market. Remember, in the August expiry, we've sort of lost 4.5% on the Bank Nifty and 2.1% on the Nifty. But look at stocks like Trent, repeated intraday and record highs. REC at 238.75, repeated intraday and record highs. Adani Power at about a 9-month high, 296.30. Heman Bhai has mentioned a very, very strong bullish move on it. As also, what else is ticking? The entire PSU banking space, Bank of Maharashtra, PNB, Bank of Baroda, Canara Bank, all in the green. In fact, the top performing index today is the Nifty PSU banking index. Coming back to Heman Bhai, pharma is something that really shot up on our radar, as well as on a lot of traders' buy lists, sir. In this space, what would you prefer?
Well, the Nifty Pharma Index has posted a fresh all-time high after a 2.5-year correction, Shailendraji. So I think everything has gone through the roof. But I believe that despite the move, I think something like Dr. Reddy looks interesting. Glenmark and Sun Pharma, but
Yes.
ideally on declines. So probably Dr. Reddy and Glenmark and Sun Pharma on a pull off.
Right, and that's a bit of an issue with the entire technical piece of the market. Traders and especially investors prefer those stocks that are in record territory, because whatever doubles again. This is not to say that you'll see about 11,000 on Dr. Reddy's fairly soon, but the fact is that momentum and price are to be chased, and those in blue sky territory often offer a better probability of higher gains compared with those still languishing lower. So that's the reason probably why Heman Bhai prefers Dr. Reddy even at record high levels. This price tick that you see is the all-time high for the stock. It fell shy of 6,000, but with Mr. Kapadia's push, I'm sure that's coming fairly soon. Sun Pharma is, of course, the largest pharma company in India, and at about 1137, it's also consolidating near record highs, which were seen 5 years ago in 2015. So that's a big breakout due from that end. Mr. Kapadia, I have exhausted my quiver of questions as far as you are concerned. I've asked you about railway, pharma, PSU banks, the Adani space, and a whole host of questions on the auto space. Have I missed anything?
No, I think you've covered the complete gamut, Shailendraji. Honestly speaking, I don't think there's anything left. No, I don't think so.
Okay, now coming back, we've done a full circle as far as the bullish part of the market is concerned, preferring to buy dips on quality stocks. So where is the pain? Where do you think the charts are slowly but steadily deteriorating, whether it is a stock or a sector?
I think it's a bit late in the day, but you have banks which have come off significantly. If you were to look at the Bank Nifty, Mr. Bhatnagar, from 46,400 we've come to 43,600. So bank is something which has come off significantly, and I think that is a pressure point. Auto has been a tremendous outperformer. That is cooled off, but there is so much, there's such a strong undercurrent as far as the auto index is concerned, that despite a 3-4 week correction, we haven't retraced too much. So that is something which is corrective, but not a deep correction. Metals would not have too much of a weightage as far as the Nifty is concerned, but metals stocks are also under pressure. So frankly speaking, there aren't very many things to pick on. We don't have a cement index, but many of the cement stocks also seem to be visibly corrective. So a few pockets of weakness: metals, cement, and probably banks and a little bit of auto.
Heman Bhai, when you look at the cement space, the monsoon has been really catastrophic this time. We've seen a lot of pain coming in, and the 3 months of the monsoon are when cement sales really come off the charts. Mid-cap cement, however, has been a strong friend of the bulls, mainly because of a couple of corporate mergers and acquisitions that have been announced. Would you want to take a punt on any mid-cap stock on the long side in the cement space?
I think probably a Mangalam Cement. Birla Corp used to be a favorite, but it's fallen off a cliff. I'm not sure why. But Mangalam Cement is something which I would look at, because the setup is a bit positive. It hasn't participated much. I would prefer stocks which haven't done very much. So at least your pain is close by. So if you need to exit a bad trade, at least we are not sitting on the stratosphere and worried about falling off a cliff. So Mangalam Cement hasn't done much, and the technical setup, high bottom, Mr. Bhatnagar, and even the monthly picture seems to be in the mood to improve. The monthly MACD is on the verge of giving a buy after 1.5 years. So something like that can be looked at.
Hmm. You've been right in saying that nothing much has happened on the mid-cap space in the cement sector, and it's been one of those disappointing things when you look at the broader capex cycle that's playing out in India. If construction majors are at record highs, why aren't cement companies following suit? Because you can't construct anything without steel or cement. But like I said, markets are a bit of a mystery as well, and that's how it is. Maybe cement is saving itself for a better month, a better quarter, and then is when you'll start looking at good prices. So Mangalam and Birla Corporation are two companies that Mr. Kapadia prefers when it comes to the cement space. Nifty down about 81 points. Remember, it's Friday, so not much of trade is expected in any ways. Markets will remain light. It's unable to take out move beyond the first support level. Even that's cracked. 19,283. That's a bit of a pain. Mr. Kapadia, 19,200 was one of the levels which I was also looking at. Worst case, where do you see Nifty headed?
Well, I would say that, like I mentioned, there are these three gaps. The first one is at around yes, the first Nifty gap comes in below 19,234, and it's between 19,234 and 19,202. The second one is between 19,024 and 19,011. So, and we had posted an intraday low, Mr. Bhatnagar, of 19,257 on 14th August. We still haven't closed below that. The 55-day exponential moving average is coming at 19,216. So there are a whole bunch of these supports or anticipated supports which could provide some cushion or a respite. So I would say step by step. There's a distinct downward bias, and I don't think it's going to go away in a hurry. The month of August is a washout, but yeah, it's a slow and steady grind. I don't see there's going to be a big sharp sell-off coming in. The VIX is 12.27. If the VIX crosses 14, 15, I think then I would be expecting a bigger fall. Otherwise, no. And this is also mainly due to the fact that Reliance has cooled off. The sentimental and the weightage impact of Reliance can't be underestimated. And I believe HDFC Bank hasn't done much. I believe HDFC Bank and ICICI Bank have a weightage compound yet is almost 55% on the Bank Nifty. It's absolutely skewed to have an index which has the two stocks have a weightage of more than 50%. It is strange, but I believe Bank Nifty will underperform, at least looking at what is happening from a intraday point of view, Mr. Bhatnagar.
Absolutely. We have to sort of make do with what we get, and that's how the indices are structured when it comes to the Bank Nifty. Two indices, two stocks control the entire move on the index, and if they are weak, which they are, that's how it is. So it's 9:47, and the markets are ticking away merrily when it comes to the cash space. Escorts is taking it away, 28.61 for you. Consistent intraday record highs. Mr. Kapadia, would you want to step in on Bank of Baroda? 191. We've seen a recent high about 207, 208, and an all-time high of 225. What are the long-term charts of BOB talking about?
We are in a correction within a bull market. So from a shorter-term point of view, I think keep a stop loss of 186, go long over here. Small revival is underway, at least on the daily chart.
So this is it as far as Bank of Baroda is concerned. Remember, this will be one of the few PSU stocks, apart from the State Bank of India, which are likely to be near record levels fairly soon. The all-time high of Bank of Baroda is somewhere like 225. We are fairly close to it. Just last month, we touched somewhere like 210, 211. So it was kissing distance there. But as Mr. Kapadia very well put it, he was saying that this is a short-term correction with an overall bull market on Bank of Baroda. Let me just do some price checks for you. As Mr. Kapadia had mentioned at the start of the show, the Adani Group is where he'd place a long bet. And let's look at the stocks there which have done fantastically well. Adani Green up 5%, 978.65. Adani Power 2.3% higher, 294. Adani Transmission 2.5% higher, 842. We have the two cement companies from the Adani Group in a bit of a red tick, so there's no issue on Ambuja Cement, 0.5%, 443. And ACC is stepping out of the Nifty Next 50 index. So not much of a pain here, but that's how it is, 1900 for you. Adani Enterprises flat at 2485, and Adani Ports is what he prefers, Mr. Kapadia prefers on the long side. This is a price that you've seen after January, 813 for you. That's how the markets are at the moment. State Bank of India, after a very, very sharp correction, despite phenomenal results, is now maybe ticking a bit on the green side. Mr. Kapadia, SBI, 554 is the most recent low. How do you see it?
It's a short-term buy trade, Mr. Bhatnagar. I would go long at current levels.
Okay. As precise and as quality advice that you could get on SBI is what is coming from Mr. Kapadia. Thank you, Hemant Bhai. It was a wonderful discussion with you. We've discussed the entire length and breadth of markets today in terms of sectors and stocks. Thank you so much for your time and those lovely picks that you shared on Adani Power, Escorts, and of course Bank of India, which you prefer on the long side. Thank you very much. Have a nice day. Let's shift focus to the corporate side of the market. With us is Mr. Mahesh Vishwanathan. He's the Chief Financial Officer of Finolex Cables, a company that's doing fantastically well when it came to the first quarter performance. Let me just go through with the numbers, Mr. Vishwanathan, then I'll come to you. An 18.5% rise in net sales in the first quarter at 1,200 crores. Quarterly net profit jumped 34% at 160 crores. You've seen an EBITDA rising to 185 crores at about a 36% jump year on year. And the best part is yet to come. Finolex Cables has given a return of 153% over the last 12 months. Mr. Vishwanathan, welcome to Business Today Television. You must be a very happy man.
Yes, but I'm not a satisfied person, so I look for something better.
Wonderful. And that's the reason why you see so many companies outperforming in the broader markets. Before we drill deep down into earnings, it's at 1,084, the stock I'm talking about. Of course, like you see in the infrastructure space, especially in the cables business, a lot of stocks are at record highs. They've had a fantastic rally, and Finolex Cables is no exception. Maheshji, let's drill down. What were the 2 or 3 reasons why you saw such a sharp increase in profit and profitability, sir?
Well, it's been volume led. So there is in the wire space, which is our largest product line, our growth in volumes has been approximately 29%, and that gives us the largest margins, obviously, and therefore that translates into better profitability over the comparable business. So across all the wire product lines that we are in, so whether it is construction wire, whether it is automobile wire, whether it is agricultural wire, or whether it is industrial wire, all 4 broad categories have grown in volume. Some of these product lines have grown almost half compared to last year, so 50% over last year. Some have grown little less. The average growth has been about 29%. And so that I think pushes up the profitability.
Right. Primarily, Mr. Vishwanathan, this demand is coming from the construction space only, and because cables and wires uh, are the ones that run our electricity and, of course, keep you very well connected. Within the construction space, is retail growing faster than institutional, or are builders reaching out more to you when it comes to demand for cables?
It's a little bit of both. We have we have direct channel partners who are like large wholesalers who push the product for us. But over the last 2.5 years, we've also stepped up our distribution activity. So that we try and ensure that no geography is left uncovered. So we have approximately, as we speak today, we have about close to 700 distributors across the country who work very similar to distributors in FMEG product lines. So they have a set geography, they have a set itinerary, and they have a set set of customers that they go and support. So that has also helped over the last 2 years.
Mr. Vishwanathan, the market is building a lot of expectations, not only from Finolex Cables, but also from your competitors like Polycab and KEI Industries, Universal Cables. All stocks are at record highs. How do you see the next 2 or 3 quarters for both your company and the wider industry as such? Do you think this kind of momentum, these kind of expectations and hopes that have built into the stock price are justified?
Well, if you look at construction, if you look at housing sector alone, the aspirational needs of our population is hardly fulfilled. So while 100% of the aspirational needs are never going to be fulfilled, my estimate is somewhere around 15%, 10 to 15% of that need has been fulfilled so far. So even if that doubles over the next 2-3 years, you are going to see a huge amount of demand from just this one sector alone. Add to that various infrastructural projects that are going on, and the essential requirement that infrastructure needs. I mean, infrastructure facilities have to increase in our country. All this will show to you that there is going to be sustained demand for quite some time to come. There may be peaks and troughs depending upon other factors, commodity prices, interest rate cycles, and so on. But generally, the growth story of India is going to be based around infrastructural development, and housing is one of those. So I think that it is there to stay for a long time to come.
Right. Mr. Vishwanathan, you are nearly a debt-free company given the size of your balance sheet. Let me just check the debt number that I have in front of me. It's flat, just 31 crores, 31 lakhs, I'm so sorry, in front of me. What are your expansion plans? How much of fresh capacity is coming on stream over the next 18 months? And what is the capacity that you're utilizing as of now?
Okay, I'll take them one by one. In terms of expansion, we are expanding on our optic fiber lines. We are going backwards, so that means that will be margin accretive to us. So we are putting up a reform facility. We are backing it up with additional drying facilities, and of course, at the product end, we are also increasing the cabling capacity. Currently, our cabling capacity is about 8 million fiber kilometers per year, and that will go up to 10 when we are done with this expansion. And at the back end, we are putting up additional draw towers as well as the reform facility, like I said. Now, this will be both margin accretive as well as revenue generating. So that's on the optic fiber line. On the electrical cable lines, we are putting up electron beam accelerator facility that will help us enter newer market segments such as let's say solar cables or cables which need higher temperature, to withstand higher temperatures or higher atmospheric or better atmospheric conditions. That should go online sometime towards the end of this year. And so we should start seeing revenue building up from the next financial onwards. We are increasing our auto cable capacity. Currently, we are booked 100% on that product line, and so we are adding more lines that expansion facility. That should be up and running, say, in 9 to 10 months from now. So, and I talked about the electron beam facility, but along with it, there are peripheral activities also that we need to do. Those cables require tinning, so there will be a tinning plant and additional support facilities out there. So, at the same time, it will help us grow revenue while also capture more of the value behind it. All this in the next, all this in the next 24 months.
My last. Yes, sir. Please continue.
All this in the next 24 months, 24 to 28 months will be approximately 500 crores outlay.
Okay. My final question to you, when you do a peer comparison with Finolex Cables and its top 4 competitors, which is KEI, Polycab and Universal Cables, you seem to enjoy the highest net profit margin of about 9.7%. Would you want to give an estimate or guidance where this is headed, or this of course is good enough, but anything that shareholders can accept from you? I just love the smile on your face.
Thanks. Well, I normally don't give out guidances, but I think we are in certain ways conservative. So we try to see how much of value acquisition we can get into the organization. And there have been times that we have sacrificed margins for volumes, but the tendency has been to make sure that profitability is kept at reasonably comfortable levels, which brings value to the shareholders. So that's, I will leave it at that. I don't want to give a specific number to say, okay, this is going to be 8 or 12 or 10 or whatever.
Right. Thank you so much, Mr. Vishwanathan, for your time and for sharing such a wonderful details on Finolex Cables. We wish you all the best. You've had a fantastic 1 year when it comes to the stock price, as also on the financial side. Our good wishes that this wonderful journey continues for your shareholders and for the company. Thank you so much, sir.
Thank you.
Okay. So that's a wrap, ladies and gentlemen, on market today. The Nifty is down 100 points at 19,271. Remember, this is the first day of the weekly expiry, but profit booking continues. We are in the 4th week of a downtrend. Nifty Bank is flat at 43,856, but the party in the cash and the PSU segment continues unabated. Remain glued to BTTV for all your news on financial markets. From me and my team, it's a goodbye for now. Thank you.
Well, 4 new motorcycles and a brand new operating system. This is what Ola Electric has announced on what it really calls it the Customer Day when India celebrates its Independence Day, and of course it means the customer's relation with the independence of its freedom. And I'm joined by the CFO of Ola Electric, Mr. Arun Jain. Arun, thank you so much for joining us. Congratulations on 4 new products, a brand new operating system. Tell us about how the journey has been from planning to execution and today launching it. Uh, how do you feel as a company who started with the ride-hailing app, then eventually moved on to a scooter app, a scooter company, now a motorcycle? So, what's the feeling there?
See, the feeling is ecstatic. A lot of hard work has gone into it, and I would say a lot of smart work has gone into it. Because you see, electric is all about technology at the core, right? And there are 5 technologies, which is software, battery, cell, drivetrain, and electronics. And that's really what brings the electric vehicle to life. And the interesting part is most of the income